Great. Well, hopefully you've downloaded the template file from lesson 1, and you can see that I'm showing you the first worksheet on that file called the step sheet. And this is really just a summary of the 8 main steps that we're going to be following throughout the lesson. And then we've got different worksheets with different headings. You can see the next worksheet is called inputs. And that is showing us all the input assumptions that we're going to be using to build our forecast. And we're also going to be calculating some historic ratios in our first lesson. We've then got a working sheet where we're going to do workings on some of the balance sheet line items, as well as the interest calculations. We then have an income statement, a balance sheet, a cash flow statement, and then we've got 2 other statements at the end where we're going to go on and look at the DCF valuation and an LBO valuation. So that's the plan. And you can see step 1 is to build the income statement and balance sheet subtotals from the historic data and then calculate historic ratios. So that's what we're going to do in our first lesson. So I'm going to click onto the income statement, and you can see I've got in my historic column, column D, some of the historic data, the revenues and the operating expenses. And I'm just going to sum these 2 numbers together. And you can see all I'm going to do here is press an equal sign and use the arrow keys to select D10 and D11 and sum those 2 numbers together. And then I'm going to work my way down and also do a similar sum function for the income before tax. Now I can do sum functions in different ways. I'm going to try it with a formula now, which you may be familiar with. I can just type equals sum and then open the brackets and then use the arrow keys to select the individual cells that I want to build that sum function with. Now you might be surprised that I'm showing you the function immediately to the right. This is really just for training purposes, so you can see very clearly what formula I'm building here, and I'm using an Excel function called formula text, but really you don't need to be aware of that. I just want you to make sure you can see the formulas that I'm building as we go down. And again, I've done a final sum for the net income at the very end. Now, having set up these subtotals, what I want to do now is just really copy them all the way across to the right hand side, and there's various ways you can copy to the cross. I don't really want to give you lots and lots of shortcuts, so you might prefer simply just to get your cursor to the bottom right hand corner. You can see a plus appears, and you can just drag it all the way over to the right hand side. That's obviously a manual operation. There are other quicker ways of doing this, but if you just want to do a drag to the right, that's absolutely fine. You can see I'm just going to copy those subtotal formulas all the way to the right, so I don't need to worry about them again. So that's my income statement subtotals built. You can see I've got net income of 65.1 in the historic period. I'm now then going to go onto the balance sheet and do a similar exercise where I'm going to build the subtotals here. So you can see in my balance sheet in column D, I've also got the historic data. It's very, very important to get column consistency within a financial model, especially if you're working off different worksheets. So I'm going to build a sum function for total current assets, my cash, my accounts receivable, and my inventories. And then I'm also going to build a sum function to add the non-current assets, the property, plant, and equipment, to the current assets. D11 plus D17. There is only one current liability, but nevertheless, I've done a subtotal for that one as well, because I love building subtotals. And then the final one, similarly, I've got to just do a total for liabilities, so the current and the non-current, or just the long-term debt. I'm going to build a subtotal there. So I've got my total liabilities, my total assets, and now I just need to work out my total equity. Again, another sum function, and then sum up the total liabilities and equity. And what I must always check is whether my balance sheet in the historic period is balanced. So I'm just going to do a little balance sheet check formula now. And the suggestions, if you just hover over that cell, is to build the formula as total assets minus the total liabilities and equity. So that's the formula I'm going to build. It's my classic balance sheet equation to check that the balance sheet is balanced. So D19 minus D34. And yes, it balances. So I'm good to start forecasting, really. But again, I'd really like to just copy those formulas across. So again, if you want to go to the bottom right-hand side, just drag across. There's lots and lots of shortcuts you can learn in Excel. These are going to be covered on later lessons. And I'm just doing a few of my favorite shortcuts at the moment. But please just drag across if you're not already familiar with Excel shortcuts, just to get those subtotals in place. And then final thing I'd like to do in this lesson is just to calculate some of the historic ratios, relationships between income statement and balance sheet data that we can see in the historic period. So I'm going to go back to my income input sheet, and you can see on column D, I've got a historic column again for column consistency. And I just want to look at some of these historic relationships, because you can see I've used some of these to make reasonable forecast assumptions in the forecast periods. So operating expenses as a percentage of revenue, let's have a look at what those are. If I press an equal sign, I have to navigate to the income statements. So go on to the income statement worksheet, and I want to express this as a positive percentage. So I'm going to put a minus sign after the equal sign, and then select operating expenses divided by revenues, and I can see that that's 90%, and I've used 90% in my forecast. Similarly, I want to work out what is the tax rate as a percentage of profit before taxes. So I'm going to press my equal sign minus, go to the income statement and work out the tax expense ISD18 divided by income before tax ISD16. Again, I put a minus sign in front of there, so you can see it appears as a positive. Now, I've got income statement assumptions. The next section of assumptions are balance sheet assumptions. And here I want to look at the relationship between some of these balance sheet items to their respective income statement items. So accounts receivable as a percentage of revenue is a common ratio people like to look at, thinking about what percentage of that revenue hasn't been collected from your customers at year end. So let's go and find accounts receivable, column D on your balance sheet, D15 divided by the revenue line on your income statement, which is D10. And we can see that 9% of that revenue is uncollected at year end. Inventories as a percentage of operating expenses. Let's have a look at this relationship. Again, because I want to express these formulas as positive numbers, I'm putting a minus sign in front, selecting the inventories number on the balance sheet, and then dividing by the operating expenses. I've kept my income statement as simple as possible. I think in practice, you may be already familiar with the fact that operating expenses are generally split into two, and you show the variable or direct costs as cost of goods sold, and you show the indirect or fixed costs as sales, general and administrative costs, broadly speaking. And really inventories is a relation of cost of goods sold. But nevertheless, for the purposes of this very simple model, we're just going to look at it as a percentage of the operating expenses. And the accounts payable, similarly, these are amounts we owe to our suppliers for supplying us the goods and services, which are then expensed in operating expenses. So what's this relationship here? Well, let's go and find the accounts payable number on the balance sheet, D23, divided by the income statement operating expenses, D11. And we can see that's 8.9%. So you can see my assumptions in my forecast are very much in line with those historic relationships. Then finally, on the financing, let's think how much of the net income was distributed as a dividend last year. So what is my dividend payout ratio? Well, let's go to the income statement to find that one out. We take the dividend of 20 divided by the net income in D19. We can see that's 30.7. And then finally, we just want to take the absolute value of common stock that we have recognized on our balance sheet. So go to my balance sheet, and that's 50. I can see in D31, and I've got my value 50 there. Just to show you the formulas, I'm just exploding my worksheet so you can see all the formulas that I've built there, my relationships, and you can see the assumptions that I've made in my forecast are all hard-coded numbers. So this is really reflective of best practice techniques in model construction and layout, keeping formulas consistent, looking at these historic relationships as a way of guiding you as to making sensible forecast assumptions. And as I say, now we've finished the setup part, and in the next lesson, we're going to start forecasting the income statement.